So we're going to jump into it now. Again, if you're joining late, you don't know this yet, but we had some technical issues. And again, you can always go backwards and watch this. But let's jump into it today. As I mentioned earlier, we're going to call this next wave of wealth, investing in the future today, because people always say, I want to invest in the market. And then they ended up waiting years and years and missing out on some of the greatest innovation opportunities out there. But let's go through this quickly. Stocks at an all-time high. Okay. That tells me the economy is booming. We have gold near an all-time high. That tells me that the Fed is cutting rates, which they are. It also tells me that potentially there could be some issues on the horizon. A lot of times people buy gold. They think what's on the horizon, whether it be some type of black swan, which you can't predict, or something else, just geopolitical issues, the market's about to tank, political issues, you name it. Oil continues to fall. It's found a bit of a base recently, but it tells us we may be on the precipice of a recession, which isn't happening. That's 2 consecutive quarters of negative growth. I don't see that happening. Bitcoin consolidating, had a pullback over the weekend, consolidating, but still about 10% from an all-time high, which is still great for a pretty volatile still asset. But that tells me, because it's not breaking out, that it's pricing in the Fed's not yet cutting rates, which we know it is. And on the other side, we have home prices, mortgage applications. Home prices are starting to kind of flatten out. Mortgage applications are surging, highest level in over a year. We have mortgage rates at the lowest level in a year. So obviously that's why we have applications going up with the Fed cutting rates. And that's increasing as if the Fed will continue to be aggressive cutters, which I think they will. The market's still pricing in 2 more 25 basis point cuts at the next 2 meetings, which will be October, December. So I still think there is a good chance that we see 50 basis points more between now and the end of the year. So this is a pretty interesting chart. This shows, and somebody just mentioned, I'm reading comments as I say this, somebody just mentioned they have cash on the sidelines. Well, you're not alone, because look at the money on the sidelines right now. There's $7.7 trillion sitting in money market funds. That's up 3x in the last 8 years. So even though the market has been really good over the last 8 years, trading at an all-time high this week, we still have money pouring into money market funds. It could be a couple of different reasons. One could be the fact that we've had interest rates increase. So money market funds are paying upwards of 4%, 4 and change. So people are happy with that. That's basically risk-free, as risk-free as you're going to get as far as an investment is concerned. But so what happens when we start seeing interest rates get lower and what the money market pays goes lower? Maybe you start looking for alternative asset classes, and that could be stocks. So there could be even if you think $1 trillion moves out of it from 7.7 down to 6.7, where we just were less than a year ago, that's a lot of money coming to stock market. So to me, this tells me that there's still big upside in the market, because there's a lot on the sidelines. So now let's talk about the mega trends that you cannot ignore. There's more than this, as you know who follow me, but these are the ones that I think are the most exciting, and it creates a nice little side portfolio for you. I'm an innovation guy. I'm not necessarily a technology guy. I'm an innovation guy. And I don't put 100% of my money into innovation, but you take a percentage of your portfolio, of that pie, put in innovation. And some of those trends you should be in my opinion: nuclear energy renaissance, we'll talk about that, robotics, humanoids, electrification of everything, AI, but the next phase. And 2 of them are healthcare and the build out of data centers, which equals energy, quantum computing, and small caps, which somebody just asked about. We'll talk about that as well. So this is just one chart before we jump into it. I like to look at this. This is an innovation chart, in my opinion. And you can see here, this is from Morgan Stanley. It goes back to 70, we're into mainframes. We had about 1 million units of mainframes. Jump up to the 80s, we had mini computers, about 10 million units. Then into the 90s, of course, we had the PC boom, about 300 million units. Then you had the desktop internet in the 2000s, about 1 billion plus users. Then mobile, then we moved to AI. And we moved to the AI era, that's tens of billions of units out there. Just look how big and how this innovation continues. And what I want you to kind of focus on here is the fact that we made the PCs in the 90s and 2000s. Where do we go from here? We've hit kind of the peak of innovation. We didn't realize that in a few years after everybody being connected on your big desktop at home, that you would then be on your cell phone, and which would be more powerful than that. And then now we're in the AI era, and we are only just peeling that first level off. We're so much more below that we can't even fathom, most of us at this point. So the upside potential innovation is still there, folks. So let's come into our first megatrend: nuclear energy renaissance. The large hyperscalers of Microsoft, the Amazons, the Googles of the world continue to sign these long-term nuclear energy contracts because they need energy and they want to be as clean as possible. Nuclear energy is one of the cleanest energies out there, which always drives me crazy when the greenies, let's call them, nothing against that, um, they don't like nuclear energy. It's one of the cleanest and one of the safest, believe it or not, safest. People will say 3 Mile Island, middle of Pennsylvania. I grew up near there. No, that was like getting an X-ray if you were near there. Then they talk about Chernobyl. That was a one-off absolute mess that was not managed correctly. Then you go to Fukushima in Japan. Why build one on the coast there when you can have, obviously a tsunami that came in? So very rare instances. So to me, it is safe, and the numbers show it. Morgan Stanley believes that the investment in nuclear energy is going to total 2.2 trillion next 25 years. Again, with a T, trillion, that's a lot of money. So why though? Why are we having this renaissance? Well, we need more power. We're going to talk about that in a minute with the demand from AI and data centers. Energy security. A lot of countries don't rely on other countries that supply them with fossil fuels. Fortunately, in the United States, we do have, kind of the natural gas boom there. We're the Saudi Arabia of natural gas. We got plenty of fossil fuels in the United States, but a lot of countries don't. So they don't have to worry about that. Think about the Ukraine-Russia war. When it was kind of a little bit worse, let's say, as far as energy a couple of years ago, and they cut off Western Europe because they're getting a lot of the gas from Russia. And you look, I'm in Western Europe right now. The prices back then were going through the roof for people to take heat and cool down their places. And then there's the net zero goals, which I just mentioned. Nuclear energy is clean. So if you're going to meet any net zero goals, the Paris Accord, you name it, bring up anyone, will never be met in the time frame they're looking at without nuclear energy. President Trump set a goal of growing America's nuclear energy capacity to 400 gigawatts. Again, 25 years from now, 2050, from 100 gigawatts today. That's 4x capacity. And I think we hit it. The World Bank just a couple months ago lifted its ban. They now will finance nuclear power projects. That's big too, especially in developing countries. And the naysayers will say it's too expensive, but that's due to irrational nuclear policies, because you have so many policies that are outdated that believe nuclear energy is the same as building a nuclear bomb, and it's not. And so when some of these policies get wiped away, it really opens the door. And this current administration, love them or hate them, has opened the door to nuclear energy. Any questions on that, please put them down there. I'll take them for you down there. So robotics, humanoids. This is one that people just don't grasp yet. And maybe we're a little bit early. But Taiwan Semi, which is a stock we've made a lot of money on here, if you remember, we'll talk about that a bit. They see about 1.3 billion AI robots deployed in the next 5 years. 1.3 billion AI robots. Amazon's deployed over 1 million robots in its facilities, and they actually assist in 75% of global deliveries right now. And that's only going to increase. Then we have Tesla. They plan to build 10,000 Optimus humanoids, which are, they had the Robotaxi rollout. They had humanoids. People questioning, are they real, not real? There are people inside those. Am I controlling them? Who knows? But we still have years to go to get that to the level where it's kind of a personal assistant. However, in factories, which is where this will happen first, the industrial industry, they're there. They're there and only getting better. Musk, again, take this with a grain of salt. He believes the future of Tesla is humanoids and Optimus, and he believes it's going to be worth $25 trillion. I don't know if it gets that big, but I do think it's a several trillion-dollar business within Tesla, and that's why I like Tesla stock long term. JP Morgan came out and said 2026, this next year coming up, will be the year of physical AI, which basically is humanoids. And the first wave of winners could actually be Chinese firms. I know you hate to hear that, but it could be. And I started looking into them recently, and a lot of them don't trade in the US, so you have to have an account, like Interactive Brokers. I use them for my international trading, investing. And there's some names out there you can invest very simply through Interactive Brokers out there that I've been doing some research on, but a lot of them have been moving up 2-3x in the last couple of years. And I know a lot of people do not invest in Chinese companies. I managed money for almost 20 years. Some clients that don't invest in Chinese companies, don't invest in tobacco, defense, whatever it might be. We all have our quirks, but I'm looking into it. I probably will recommend some for NXT Legacy members here in the next few weeks or months, depending how long it takes. A little bit tougher to do research on that. Now, this one I love. And again, it's not about really the most exciting thing you'll ever see. It's electrification of everything. And this is just a little graphic I found, which I really like, from National Energy Education Development Project. It shows a power plant generates electricity. It could be coming from a lot of different things. It could be gas, coal, nuclear. Then it goes to transformers. They step up the voltage, then they have transmission. So what do you need here? You need more cable, right? Then you get the transmission lines to carry it long distances. And then you get down and you have in a neighborhood, there's other transformers, what steps down the voltage. Then we get to the distribution lines, which carries to your houses. And a lot of those poles there have transformers on them to step down electricity before it enters the home. So what do you see here on this chart? This is something I would ask like a fifth grader. Well, I see a lot of cables connecting things, and I see that we need 3 different transformers. So that to me is a number one investment idea. It's cables and transformers when it comes to electrification of everything. So just a couple stats here. The increased demand is driven by data centers, building electrification. A lot of buildings are going electric. Industrial demand, in new manufacturing, the reshoring of American manufacturing, and EVs, electric vehicles. U.S. electrical demands to increase by 2.5%, compound annual growth rate through 2035. 2.5% sounds like nothing. Usually I talk about 50%, 60%. But however, that's 5 times the growth that we saw in the last decade from 2014 to 24, where we average about 0.5, and that's a generous 0.5. So the 2.5 sounds low, but compared to where we were, 5x, that is a huge increase. Now think about this. 31% of transmission, all the transmission lines, everything, and 46% of the distribution infrastructure within our grid are within 5 years of a useful lifespan. Meaning within 5 years, they're done. They're not useful anymore. And what is really concerning is that last year, 2/3 of the spending from electric utilities was on replacement, not new. I just told you we need 5 times more electricity growth, not 5 times more electricity. The growth's 5 times more. But we're just spending money on replacements. We're not building out new. We can't handle it. And you look at this, the current fossil fuels, they power 54% of water heaters. That number is going to drop dramatically. You're seeing electric water heaters come in everywhere. 65% of space heating, that's going to drop dramatically. And still 98% of passenger cars, and eventually, who knows, it's 20, 30, 40, 50, 100 years from now, that's going to be down to about 2%. So we see the demand, the trend going in the right direction. And here's another chart that's just kind of nice infographic here. And this shows that investors need to get in front of the big money and flowing and upgrade of failing infrastructure. This is America has a $3.7 trillion infrastructure funding gap right now. And this comes out by the American Society of Civil Engineers every, I think, 2 or 3 years. This is from 2025, so from this year. And you can see here our overall grades is C-, which is really bad. And some of them are D, D pluses. I think the best is a C, and I think that's actually bridges, which used to be really bad. But look at here, $578 billion for energy. Then you have roads, you have wastewater, all kinds of stuff here that this all kind of goes back to electrification of everything. You need to upgrade the infrastructure and the electrical grid that we have in the United States and abroad. This is also an international story. It's over here in Europe as well. You can see it firsthand. So again, any questions on those first couple, throw them in there. But now let's go down to AI, the next phase. 2 investment opportunities to me. There's a lot of investment opportunities in AI, but 2 that I'm going to talk about today that I think are often overlooked. One's the energy demand I just talked about. The energy demand from data centers is set to double by 2028. So that's 3 years from now. It's almost 2026. So energy demand from data centers is set to double. And AI-related GPUs, which are graphic processing units, the shipments for them are expected to go from 9 million last year to 25 million in 2030. And when you have more GPUs, a lot of think NVIDIA, that's GPUs, more GPUs sucking up more power, more energy. And then let's go over to healthcare. There's a great article, just Google it. That they have an AI stethoscope over in UK it was. And now you put it in a couple of seconds. It's about the size of a credit card. You put it over just like a normal stethoscope, like you're listening to the heart, which, by the way, the stethoscope was invented in 1860. It's a fun fact I found out when I was doing this research. So it's over 200 years old. So it really hasn't changed in 200 years, believe it or not. So now we're actually changing. Talk about being behind a curve. And it can detect several heart conditions in a matter of seconds. Think about the life-saving upside to something like that. So AI in healthcare in the very early stages. You think AI is in early stages? AI and healthcare converging together, so far behind, but it's on its way up. A lot of areas are going to be disrupted. Drug discovery, instead of taking 10 years and $1 billion on average, and that's a drug that gets approved. Think about drugs that don't make it even nearly that far, that you're wasting hundreds of millions on, wasting years on. personalized medicine, where you'll go in, you have your genome, and you'll have medicine that is created for you, not just one all for everybody. Okay, you have this disease, you're this age, boom, take this. That's really bad, and again, antiquated way of treating a disease. Imaging and diagnostics. Many of you know I go longevity clinic every couple of years. I'm due to go later this year, and you go in and you have my 3D heart. They show every little layer. It's amazing. I've shown it in different conferences before, and now that gets spit into AI and looks at my images the last couple of times and can tell every little thing. I mean, obviously a doctor looks at it as well, but it's just another level of really diagnostics. Robotics and surgery. We all know Intuitive Surgical, ISRG, one of the first robotics companies out there, publicly traded, has a Da Vinci system, which does all types of surgeries, much better than a shaky hand from a surgeon. Remote monitoring, so wearables, stuff like that. And then just the operations that go on behind the scenes. I think about how you go into a doctor and you still fill out pen and paper. I mean, that's crazy to me. Your record should be there. It should be AI. You should be able to pull it up and know exactly where you are with your health and then go from there. So big upside, in my opinion, when it comes to healthcare. Tough to find which ones to go into, but we've been able to do it. So you can see here in our next pro level, we have an AI healthcare portfolio I launched on February 11th. So not that long ago, just looking back about 7.5 months. We have 3 stocks in it. Once we launched with 3, we're going to add more, but we have 3 right now, all equal weighting. 2 are up, 1 are down. Heading into today, since that time frame, those 3 stocks are up an average of 18.5%, which I'll take that in 9 months. S&P in the same time frame is up 9.7, and the XLV, which is the healthcare ETF, actually down 6.3. So if you want to take benchmarks, which when I do these portfolios, it's not, okay, this stock did great. It's how's the portfolio doing? Because I'm recommending buying equal weight. So we can't just pick one. And, I always get questions, well, this one's down. Well, the portfolio's up, and not everyone's going to be up. That's why we diversify through a couple. But if we're going to use a benchmark, S&P, I just use that. It's industry standard. But then you look at the XLV, because if we're doing healthcare and this is your healthcare portion of your portfolio, it better be beating the index. And the XLV is down 6.3%. Again, this is 7 months, so I don't want to take a victory lap. We have a long way to go, and I think these stocks have a long way to go. And the smallest one in there is $1.5 billion company. We had one hit an all-time high just this last week and some really positive FDA news. But 3 stocks that you may have heard of one of them. They're not really household names, but the biggest one's probably 30, 40 billion. So a little bit of different sizes, a small, mid, and large cap. And again, it's a nice way to diversify different cap levels, different size companies. So quantum computing, I'll get to see good question there, Charles. Quantum computing, to me, is the next megatrend. It's kind of like your next AI. I've been talking about quantum computing for a while, and we had some quantum computing stocks that have done well in our Leaps portfolio, which is long-term options, and we actually took some profits off the table recently. We had a nice 100% move on our second half, so we took it. But because I think when you come to quantum computing, it's not going straight up. There's going to be some nasty pullbacks along the way, and not trying to time the market always, but when you have those pullbacks, it's a great opportunity. To me, still in the very early stages. But the stock's already moving, and there's going to be a lot of opportunities I just mentioned to buy during pullbacks in the next couple of years. And we have the National Quantum Initiative Reauthorization Act. It's a big word, a big act. It's going to provide funding boosting for quantum computing companies here in the United States, as well as their potential customers. We're waiting on that. So Trump had passed one back in 2018, his first time around, and then 2023 it expired. So they're waiting that most likely they're going to come out. Remember, there was basically an executive order for AI. I think they're going to do the same thing with quantum. I think we're going to see that, and these quantum stocks should take off from there. The Department of Energy announced just in the last week they're partnering with IonQ, which is a publicly traded company, and Honeywell, and the Electric Power Board of Chattanooga. They're developing quantum use cases in space. That sounds crazy. I know. I read it a few times. In space. They're talking about doing SMRs, small modular reactors, nuclear reactors on the moon. They're talking about a lot of stuff, and sounds crazy now, but a lot of stuff does sound crazy until it's not. And again, probably early on this, but these are the times you make the big money. And a lot of estimates out there. One of them is it can grow from $4 billion last year to a $72 billion business in 2035. So in 10 years, you're looking at what, 17x or so, somewhere around there. So big upside, and that's what I like to see. All right. And somebody asked about small caps before. Here's the small caps. This is IWM. This is a iShares Russell 2000 ETF, small mid cap index. So 2,000 stocks here, very diverse. And just this week, it hits first all-time high since November 2021. And I drew this red line up here because there's November 21, and then it pulled back with the rest of the market. Tried to come back earlier this year, hit that double top. Double top at an all-time high is very important. And because the more times you hit this before you break out, it means the breakout's gonna be bigger. We're trading right below that breakout right now. We did intraday break and then we closed below. We're trading right below it today. I think we're gonna see it. I think it's on its way. And the question before was about, interest rates coming down. Is that good for small caps? Historically, very good for small caps. And the reason for that is a lot of small caps are not yet profitable and they're in the growth stage. So in a growth stage, what do? You have to borrow money and use that money to invest in your company and grow. Well, as interest rates come down, borrowing rates come down, money flows easier. So that's a huge bonus for small caps that aren't yet profitable. So you always have to look at that, though. One thing that I always like to see within a small cap, and I'd say 9 out of 10 small caps I recommend will follow this rule. And this rule is, it has to be a path to profitability. Because if I don't see a path of you making money in the next couple of years, I don't want to own you yet. It's too early. Because maybe you never make money and you go out of business. So you have to have a path to profitability. And you look at the PE ratios, you look at the S&P 500, forward PE ratios, looking at the estimates going out to the next 12 months. S&P trades at 22.4. First of all, people say that, the CAPE ratio. The CAPE ratio has been around a while. And the people that always scream and yell that the CAPE ratio is at the highest level since the tech bubble, they used to scream and yell a couple of years ago, it's the highest level other than the tech bubble, and the stocks keep going up. We live in a different world right now. The CAPE ratio to me is garbage, throw it out the window. The PE ratio is one ratio. It's only one. But looking ahead, 22.4 isn't that high. That's not outrageous. That's not bubblicious. We're not at a point where we're going to start, bubble bursting. But look at the S&P Small Cap 600 looking forward, 15.6. That's cheap, 15.6. Look at the Mag 7, Magnificent 7, 30.1. That's the mega caps. So the small caps to me have underperformed for so long. And there's always a natural cycle, returns to the mean. Small caps to me are setting up to have a great few years. I think they will outperform. So let me just jump into this real quick. A lot of you don't have any memberships. A lot of you have NXT Core, which is, the McCall letter. You get our market insights, and it's really the best foundation for, the long-term beginning investors. I focus mainly on the large caps. But then we have Next Pro, which is, you see the prices there. Includes everything in core, plus you get early opportunities. And this is why I'm talking about this, because that's where you focus on the small caps, small mid caps. And that's where I think the greatest opportunity is in the next couple of years. But it's also, unfortunately, the hardest for an individual investor to determine which stocks to buy. Even if you know the trend, you'd have to determine the stocks. And obviously, I've been doing this for 20 plus years. And they're not all winners, but you have to look and find it. And all you need is one big winner to really change the portfolio you have. One big nuclear winner, one big quantum winner, and the other two can do nothing, go down, and you still make a lot of money. You also get exposure to Next Wave Trader, which is a long-term leap, something I've been doing for a while. And last June, I launched it to the public for the first time. And knock on wood, it's been my best performer ever for this short amount of time. It's only been 15 months, but the best performer I've had. So the normal price for Next Core is $79 a quarter, which isn't expensive. It's 88 cents a day or so, give or take. So it's not a lot. And you get weekly updates with that. And you get, obviously, exposure to a lot of different portfolios. But then you have NXT Pro, which you get not only that, but the small cap and the Next Wave Trader Leaps as well, which has been really good. So what we're doing today for everybody, and I know a lot of people, because we had a complete mix-up with the way that we had the link go out. So not a lot of you are here, but hopefully you're going to be watching a replay, and we'll honor this, not just today. We're going to take the NXT Pro in half. And the reason I'm doing this is because a lot of people get in NXT Core, and then they love it, and they want to upgrade, and want exposure to small caps and other stuff. So I'd rather lock you in now, and it's only for a quarter, so you can get out after a quarter, but half off $149. So it's only $70 more to unlock 2 additional premium services. It's an instant upgrade right now. We're not going to try to upsell you anything. It's an instant upgrade to the deep research we're doing on small caps and leaps. And again, it's less than 88 cents a day, folks. And I tried to go before this what you can buy for 88 cents these days. And it was funny, not a lot came up. The one thing that came up is you can get a 4-ounce can of sliced jalapenos at Walmart for 88 cents. And I love jalapenos, so that sounded really good to me. And there's actually a Walmart in Nicaragua. So I'm gonna have to look into that and see if it's the same price. But 88 cents for jalapenos, you cannot go wrong. 4 ounces cut in a nice little sauce. So keep that in mind if you like spicy stuff like me. So what have we done? Like why NXT Pro? You know, the real results from past recommendations. Our nuclear energy portfolio I talked about, we launched this 13 months ago, folks. It's on average up 100%. We've had several different positions. We closed out completely. We have 3 open positions in it right now. We had some that we sold literally up hundreds and hundreds of percent. Our deep sea mining portfolio up in just 1 year this month. The portfolio, not one stock, the portfolio up over 100% in that time frame. So we have, these are all documented. You know, a lot of people watching might be members already. And then Next Wave Trader, I had to show this because you don't have this very often. Again, we launched this in June of last year. This is every closeout trade that we have. Every closeout trade, you can see the numbers. You know, and we have about 6 or 7 open positions down, and 4 or 5 are down. When it comes to this strategy, we're looking for one move, one catalyst, and we take it and we get out like this. I will say, as good as these numbers are, there's several positions I went through this weekend to see how they would have done if I would have held. There's one that would have been up 700% if I would have held on to it. I'll tell you what it was. It was Oklo, OKLO, which is a nuclear company, small modular reactors. Obviously, I sold way too soon. I thought I was a genius getting a triple-digit gain. And as you can see, as I'm telling you, up over 700% since then. So here's a free stock idea. I told you I was going to give you a free stock. Then I'm going to take some questions from you. So it's Niagen Bioscience. If anybody's heard of that or owns it, please type in chat. And be honest, I'm curious if anybody has heard of it. And I hope you don't mind. Again, it's 7 p.m. here, so I am allowed to have a sip of a beer because it's been a frustrating evening doing this. Okay, here we go. So what's a trend here? Not one of the trends I talked about. I didn't want to give it away. It's longevity, it's the aging population, wellness, and the growth of NAD+. So the projected industry growth of NAD+ is 24% annually, which is big. I mean, that's over and over, you know, compounding a growth rate. So they have brand strength. So True is a brand. True Niagen is one of the best-selling NAD+ supplements on Amazon. We're tens of thousands of 5-star reviews. I'm a big longevity guy, so I don't take NAD+, to be honest with you, but I've looked into it. I've talked to my doctor about it, and something I think I'm going to add to the repertoire. I have done it a few times going in and getting IVs, but I don't do it on a regular basis. But now their product is sold in over 600 clinics in the US. They have the pricing power, which is very important because they are the leader. And this is what's important when it comes to a small cap company. It's about a $900 million company. So it's less than $1 billion. It's a tiny company. Profitable for the first time this year. And again, the path to profitability, once you turn that path, a lot of times things really start to change for you because a lot of investment advisors, a lot of ETFs, funds, hedge funds, institutions can't buy until a company makes money, and they're now there. And there's big growth ahead. And get this, debt-free balance sheet, no debt. So this, you're not worried about, oh man, they have all this debt they have to pay down, no debt. And here's a chart of it. You can see here. So this is a chart going back to 2023, end of 2023. And somebody says they take it. So somebody out there taking it. So what I like here is a few things. Look at the bottom down here. All these big green spikes in the bottom, that's volume. So big moves on big volume. And when you have pullbacks on the red, a little bit lower. That means big volume comes in. It's pulling back from multi-year high. We're at about 14.5. Formed the base around 9. We're trading around 10 today. Bullish volume, as I mentioned, and it stays in the uptrend. Because you take a look at a pullback in July, then you look at the pullback here, July of last year, beginning this year, and the pullback we just had, higher lows. And every time it goes up, it's a higher high. That is a definition of an uptrend. So even though it's pulled back, we're still in an uptrend. And that is why you be patient in the market. You don't chase the highs. And you tell you what, folks, I've missed a lot of stocks in my career because I waited for the pullback and I missed it. And sometimes I kick myself. But I'd much rather wait for the pullback at a better entry point because there's always another train coming around the corner. And especially with the market with thousands of stocks, there's a lot of opportunities out there. So this is what I'll tell you. I've never shared this before. I don't own any of it. I never do. especially small cap, if I'm going to tell people about it, because I think that's very unethical for me to own it and then push the price up if people buy it. So I do not own any of it. Uh, will I buy it in the future? Possibly, likely, or recommend it to our subscribers, one of the two. But I do love this company, and it's such a niche, and it hits a lot of different um, angles for me. A lot, the longevity, the wellness, everything. Everybody these days is trying to get healthier, and we have a growing population that wants to live longer. They want to hang around, see their grandkids do different things. So to me, this is a really nice way to diversify portfolio. Obviously, I can't tell you to buy or sell. No personal recommendations here, but I would be, not too aggressive with it because this is obviously still a less than $1 billion company. But I love the setup right now, and I love the long term. I like the fact that it's making money, and it's going from making a few cents a share to 2 years estimate of 40 cents a share and up from there. So really, really impressive looking company. So again, I'm gonna take questions now, but go back. I'm gonna keep this up today only. I'm gonna let it go for a couple days only because we had a complete mess up with our initial start here. But NXT Pro half off, and if you're already an NXT Core member, it's a great time for you to get in as well. You can lock in right now if you want. Only $70 more than what you're paying if you want to get Core. I think it's worth it personally. Obviously, I think it's worth it. I wouldn't be here. But yeah, again, you're looking at something that you're not spending that much money. I'm not asking to put out several $1,000s. And again, instant upgrade, get exposure to the McCall letter, NXT Core, small cap stocks, early opportunities, next wave trader leaps. Get exposure to everything. So, all right, let's take your questions here now. Let me shoot over and then throw your questions in there, and I'll jump in them. Sorry I went fast, but I know we're a little late with the delay, so I wanted to jump in there. And let me take a look back at a few other questions that have come in there. We talk about Ethereum companies for the future. I assume you're talking about companies that are buying Ethereum, kind of Ethereum capital companies. And, there's a few out there. BMNR is one of them that we have Tom Lee behind, who I highly respect as an analyst. I listen to a lot of podcasts, and recently on cryptos and the Bitcoin treasury companies such as MicroStrategy, which was kind of the original out there. There's a few others that are popping up. There's a lot of small companies that are now suddenly becoming Ethereum, Bitcoin, TAO, you name it, different types of treasury companies. I like it, but what happens is not all of them are going to work. A few will, because what they're doing is they're buying cryptos instead of holding cash, buying cryptos, and then using that leverage and raising more money at a higher valuation and going out and buying more. So the only thing that worries me is at some point whether the price comes down can ruin the strategy, or if they stop raising money, or it gets out of whack where the actual value is so much higher than the value they have on paper or in the in their treasury. So it's not as easy as saying, well, they're doing an Ethereum treasury company, let's buy them. Got to see, do they have fundraising? Are they bringing money in? Not just, hey, we're looking to raise $1 billion. Well, that's great. I'm looking to raise $1 billion too, but until you actually have it in your hands, it doesn't mean anything. So to me, you really have to do some deep research in it. I think there's great opportunity out there in some of them. They're still aggressive, and I would be really cautious as to which ones you go in. And I personally prefer Bitcoin over Ethereum, and that's really stated in my net worth that I have. I have a large portion of my net worth. I've never sold any Bitcoin. I've had it for years, and I think I said last time I did something like this, that building a house in Nicaragua, a new one, I actually borrowed against it at a rate that was lower than if I wanted to borrow money from a bank in the United States, which you can't for a place in Nicaragua. So borrow money against that because I didn't want to sell about 7 months ago, when I had to pull the money out to start paying for the build. And I got to tell you, using that small percentage to borrow versus what Bitcoin did in that time, 6-figure difference just by doing that. So I'm a long-term believer in Bitcoin. I think we're just scratching the surface. I've been doing some research on Bitcoin and institutions and advisors that are now able to buy Bitcoin ETFs for their clients. Like when I managed money, we couldn't do that. The Bitcoin ETFs weren't there. We couldn't hold Bitcoin in our account, so it was very difficult. Now what I'm seeing is that less than, I think it's 0.3% of advisors have money in Bitcoin of the amount of money, allocations 0.3%. Think about if that goes to just 1% allocation, just a 1% allocation, which I think for most people, even if you're conservative, a 1% allocation of Bitcoin, say it goes to zero. If it goes to zero, I'm not a happy camper, and I don't think it's going to happen. But say it goes to zero, just to play it out. That means if you have a $100,000 account, you're sitting at 99 if everything else goes flat. It's only 1%. So I think 1% is very doable. So for me, from 0.3 to 1, I think it's going to happen. And again, I'm going to speak November 1st or 2nd, something like that, in Chicago, to a group of advisors that manage tens of billions of dollars, not hundreds of billions of dollars. And I've spoken several times at this conference way back in the day about Bitcoin, and they've become a little bit more educated on it. But most of these people that manage that amount of money have no idea what Bitcoin even is, but they know their clients want it. So I'm going to go teach them how to do that for their clients. So I'm seeing it personally. So that to me is a huge reason Bitcoin continues to go. And then it's just simple supply and demand. Only 21 million ever. We got about 94% has been mined. The next 6% will be mined in the next 115 years. So if demand's there, supply's not. And I gotta tell you, that's supply demand, simple economics. It's econ 101. We all learned that in school, that more demand than supply, prices have to go up. So I see Bitcoin going up from here. Somebody asked me about CRWV. It's a stock that I don't own, but it's been a hot stock. A lot of people like to trade it. It's got a lot of volatility in it. CoreWeave, it's a $130 stock now. Went public last week of March, ran up to 190, pulled back to 85. Now we're at 130. It's got a great business model, and I think there is big upside in CoreWeave. This is a play on AI data centers. It's got a crypto aspect to it. So I like it. I don't know what the great price is to buy it at right now, just because 3 weeks ago it was at 85, now it's at 130. So it's obviously moved quite a bit in that time. It's up about 45, up over 50% in the last 3 weeks. And yeah, could it retake the all-time high at 188? Yeah, you still got another $58 to the upside. So yeah, it's probably its new all-time high in the next 24 months. As far as entry, I'm not quite sure if this is the greatest entry, but if I had it, I would definitely hold it. I think it is a leader in kind of the next generation of stocks, and it's got a great team behind it. And it's a company that, yeah, I'd feel more than safe owning it. But just know that you're going to be in for a wild ride, because you could say to yourself, well, yeah, I bought it at 50 in May and ran to 188, back to 85. A lot of people probably got shaken out and sold. Now it's back to 130. So you have to be able to have a really strong backbone there to be able to live through those ups and downs. And this is all in a matter of 5-6 months. I'm not talking about 5 or 6 years. But keep in mind, all the biggest winners, folks, the biggest winners, the Amazons, the Googles, and Nvidias, all have had multiple 50% plus pullbacks. Some have pulled back 80%. Apple did, Nvidia did, Amazon did. All on that way. Because people say, well, I should have bought Amazon, Apple, Nvidia back and they held on to it. Not many of you can sit through an 80% pullback. It's just not happening. So yeah, for a stock like this, I think you have to kind of put it away. Something that I do is I find a company I like, and I was doing it every week for a while, putting 10,000 into a new company, just letting it go, building this portfolio. And you get a 10xer in there, $100,000. And some will go flat, some go down, but it's a great way to build a portfolio. And for a lot of mine, I buy and hold for a long time, and I let it go, because I say my biggest mistake I've ever made in my investing life is selling too soon. I look at some of these stocks that I held 12 years ago that I think, wow, would have changed my life in a different way if I would have just held on to one or two of these stocks. That much difference. Palantir is an example that I sold half of it maybe a year ago, not quite, maybe 8 months ago, and it just took off from there. And yeah, the other half I have is up 7x, 8x or something. But the other half was a big position, and that's a big difference. I should have held on to it all. Never get upset taking a big gain or sitting on a big gain now. But yes, you have to sometimes hold through the ups and downs of that. So any other questions, let me know. Any questions on the services? Because like I said, I think this is a great offer. And, launching Next Wave Research just 3 weeks ago. So it is fairly new. And I've been over here in Spain, kind of head down, working on it, getting away from the stuff going on in the U.S. and just working all day. And it's been great. And we're working our butts off over here. And I see huge upside for our company. I see huge upside for our products. And those of you that are or consider legacy, which is our high end, our third tier, we have a new product that gets everything we do, and anything new that comes out. As long as you remember, anything new that comes out, you get automatically. We have a swing trader that we just launched last week. That's going to be swing trading. I'm going to be launching a private investing newsletter in the next 6 weeks, I'd say. I already have the first company I know that I'm going to recommend that's available to anybody. You don't have to be a credit investor, a millionaire, or anything. As little money as you want, and you have exposure to private companies. And then the goal is those go public, and we make big money off it. So that's an area that I used to own a company called CrowdVest in back in the day in Nashville. I sold that company. CrowdVest broker dealer, I owned that, sold that. But I used to help companies raise money and go public. So I know that space really well. So we're launching that within the next probably 6 or 7 weeks, I'd say, maybe even sooner, depending on how quickly I get this deal together. But that's with legacy and everything else. So we have a lot of new, fun, exciting products coming out right now. But again, any other questions, let me know. Coming through. If you don't, then I'm going to wrap it because it is 7:15 here. And I do have a 8:45 appointment at flamingo dancing. And no, I'm not dancing. I'm going to go watch some flamingo dancing and some Spanish guitar for an hour and have a glass of wine and enjoy that this evening at 8:45. So I have an hour and a half to get there. But any other thing else, let me know. Any questions on the services? And these people are still sitting there. I could see you all sitting there. You have to have questions. You always ask me questions in email, then you actually get in front and everybody clams up. They don't have any questions on any stocks that they're talking about or looking at. Nobody has a question. All right. Again, we'll wrap it here then. So again, today half off, but we'll extend it for a couple of days because of the mix-up we had when we launched this. But again, folks, thank you so much for bearing with us. It was a bit of a mess getting started, and we're going to try to do this every couple of weeks, free for everybody. Jump in. So get your questions ready next time, and hopefully we'll have a little bit better way of getting this testing out to you. We'll have it all ready and no hiccups next time. I completely promise. But again, thanks for joining, and for everybody here at Next Wave Research, thanks so much for following us, sticking with us through everything, the ups and downs. And we're super excited for what's coming around the corner. But have a great rest of your day, and we'll see you again in a few weeks.